I don't know about you, but the market is acting really weird right now because we've got wild rumors about Trump. Inflation has crashed, so is that good news or bad news? And the fear about strategy is coming back strong. In short, today we're going to cover all the macro news, and at the end we'll answer the real question. Are we going to revisit 60,000 or even lower, or is the market building a new range? By the way, let me know in the comments if you are feeling more bullish or bearish for the coming days or for the coming weeks. But before we talk about the different signals that are actually pretty encouraging, we need to look at the reality of the situation. That is to say, the market is still plunged into extreme fear, with a fear and greed index at 14, and the fear and greed index has doubled in 24 hours, admittedly from 7 to 14, and that shows that the panic is easing a little bit, but we are still very much in a zone of extreme fear. And in these zones, actually, these movements become irrational. So the rule is, first, take a breath. Second, stay clear-headed and follow the signals instead of reacting impulsively. And that's exactly the purpose of this daily update, to keep you informed and to really analyze the information here. But while the market is currently paralyzed, there are certain rumors going around. First of all, according to Jim Cramer, Trump supposedly took advantage of the crash to buy Bitcoin. In any case, that's what he seems to suggest in this video, and that it would actually strengthen the United States strategic reserve. He even reportedly said he was buying back at $60,000 and would fill the famous Bitcoin reserve. In short, obviously, be cautious about this. It's just a rumor, especially since the source is Cramer. And we know a little about the character. We know a bit about his track record. Every time he says Bitcoin is going to crash, going to fall to zero, it goes up and vice versa. But if in reality the reserve is actually being strengthened in those areas, it would send a pretty clear signal and message. It would mean that institutionally, 60,000 would be seen as a strategic price, not as the end of the cycle. Knowing that we've fallen back to the ATH, the highest point, the price record from the last cycle, this is only the second time in history that we've reached it, with the famous $15,000 with an ATH at 19,000. On the macro side, what's happening? All eyes are turning back to monetary policy, because it's what will decide whether we can have a rebound and if it can hold or not. And there's one figure that changes everything. It's real-time inflation, called true inflation, which has dropped to 0.68%. I think it's very rare, maybe the first time we've dropped this low. It's actually pretty good news. So that's very far from the official CPI, which, let me remind you, is around 2.7%, so it's well below that. And if this trend continues, the pressure on the Fed becomes enormous, because with inflation this low and slowing down this quickly, we could even face the risk of deflation, which is another topic altogether. But keeping rates high under these conditions becomes much harder to justify in any case. And some are even starting to talk about a more aggressive easing than expected towards the end of the year. In short, the market isn't waiting for official announcements. It's already moving ahead of time. So here, we're talking about Bitcoin above $70,000. This weekend, it went from about $72,000 to $67,000, a $5,000 window. But if the CPI ends up aligning with the true inflation numbers, 0.68, the window for liquidity to return, which is what we need, could open sooner than expected. Anyway, I'll talk to you about it in the daily update. Don't hesitate to subscribe. More and more of you are joining. And thank you, by the way, for supporting the channel and helping the algorithm with your comments. It really means a lot. And that, historically, just to come back to it, is a major catalyst for Bitcoin. It might even be the trigger the market needs to bounce back, and this time bounce back into the green. But still, on the macro side, I'll keep it very simple for you. But this time, on the other side of the world, in Japan, the Nikki 225 is soaring by 6%. Good news in a way, and it's hitting a new all-time high after the victory specifically of the Prime Minister named Sanae Takahashi. So this could become a risk-on catalyst in 2026 in Japan. I had to mention it to you. We also have, now let's talk about what could directly impact the crypto ecosystem. And we have the well-known negotiations on stablecoins entering their decisive week. Because on Tuesday, February 10th, tomorrow, the White House is bringing everyone together. We've got JP Morgan, Bank of America, we've got Wells Fargo, we've got, on the other side, there's Coinbase, Ripple, Circle. In short, as you understand, the goal is to resolve the major sticking point of the Clarity Act before the end of February deadline. And this is the heart of the conflict. The question is whether non-bank crypto entities will be allowed to offer yield, that is what we call yield in the sector, on stablecoins. And what comes out of this meeting could directly influence risk on appetite. So the willingness to reinvest, to have liquidity, right? Risk on, risk off in the coming weeks. Because in fact, this often determines who controls the digital currency of the future and who actually captures the liquidity. We also have a strategy that is coming back to the heart of the debate. The question is, does this strategy really risk anything in such a fragile market? Well, that's their answer very clearly, because according to him, the company remains safe. Unless Bitcoin collapses to $8,000, I think we're pretty safe, but you never know. And if we stay there for 5 or 6 years, even safer. Why that level? Because in fact, at that price, their Bitcoin treasury would be equivalent to their net debt, and they would no longer be able to cover their obligations, which are only convertible with Bitcoin. So yes, it's scary, but the structure is built precisely to withstand the volatility of a cycle. I think that experiencing a Bitcoin at $8,000 for 5 to 6 years, we're still safe. But also, we take a slightly more strategic view with this point, because what we're experiencing isn't a classic bear market, according to Bernstein. Here, it's a crisis of confidence, and I completely agree with him. It's an extremely fast crash. Normally, a bear market is actually long and boring. Of course, there are phases of major corrections. Maybe we could have another crash. That's not out of the question. But we've fallen very quickly, very sharply. So a crisis of confidence, uncertainty, the market, all the markets are going in every direction, gold, silver, etc. Silver crashed by 25%, which was huge. And Bernstein actually is adamant because Bitcoin's fundamentals haven't been broken. I agree with him. The current sell-offs mainly reveal panic. I agree with him. And what we call deleveraging, right? Plus, if we add to that in the mix, the macro shock, it results in some accounts. We had a real bloodbath. It could end up being positive if this is a bottom, and we've accumulated during this period, but they simply maintain a target here of $150,000 by the end of 2026. So we have to be cautious, because we know that predictions, I think it was Tom Lee who said we would retest the ATH in February. In short, you have to be extremely careful. But could we revisit $60,000 or even lower? Yes, it's not impossible, as I was saying, but retail investors remain fragile. And retail, I think, most of the time has already sold everything. But that confidence will have to come back. It's going to take time. But in the short term, the most realistic scenario is that we have a range, that the period of volatility settles down. So pain, yes, clearly. Breakdown, no. So is the 60,000 bottom confirmed? Let me know in the comments. Do you think we've already hit the bottom with an RSI that's extremely, extremely low, lower than we've ever seen before, actually? And today it's not confirmed, but it makes more and more sense. That is to say, when the market is fragile, when it remains fragile, we could still see one last wick, which is still possible. On the other hand, there are macro and institutional signals that are rather positive, that are starting to take shape and are actually beginning to change. They're shifting the narrative a little bit. And we'll finish with the little poll I did on Telegram. Feel free to join us on Telegram. But in the meantime, I'm curious to know what you think the bottom is. So 27% of people voted, and out of 1,500 votes, only 27% think we've already hit the bottom. The lowest point, meaning the famous $60,000. There are 46% who say we'll go lower, 20% say $40,000, 6% say $30,000 or below, and 2% say $10,000. So there you have it. For you, it's not out of the question that we could drop down to 50,000, and 27% say it's already priced in. Now, you should know that the crypto market usually does the opposite of what the majority thinks. So the majority thinks we're going to go lower. You finish the sentence. See you tomorrow. We'll catch up on Telegram and also in this video, where I talk to you specifically about, in my opinion, what is the lowest point of the cycle and when should we expect it. I'm sending it to you right here. Click on it and you'll get a lot more information about, in my opinion, my prediction for the lowest point. And when is it going to happen? And what is the strategy, especially the one to put in place? This was Julian. See you tomorrow, full of energy. Ciao, ciao.